Welcome to your weekly market update. We have a prediction, we have some recommendations, and we have some insight that I want to go over with you. So circle on your calendar May 10th. That is the date when we believe mortgage rates will be pulling back hard. I'll show you why in a second. What that means for you as a buyer, you have a very small window to get a good deal. Now, most people will think, hey, I'm going to wait for rates to come down and then I'll buy. That, I know it's counterintuitive, but you don't want to do that because there's way more demand at that time. There'll be way more buyers that are sitting on the sidelines right now enter into the market, and you will be paying most likely higher prices because of that. So real estate, simple supply and demand. There's a little bit of excess demand right now, or supply right now, not a lot. You got to take advantage of that. There's less buyer activity. You got to take advantage of that because when rates come down, there will be a massive move to real estate. So here is why we believe May 11th is the magical date. This is the chart. So I've been talking about this if you follow these videos now for several weeks. Here is Consumer Price Index. Okay, so this is what the Fed looks at to monitor inflation. Right now, after the December reading, which came in at 0.3, remember this replaces 2021. So this is a yearly average. So as this comes down, it replaces the higher numbers right here, right? As you can see, there were 0.6. That means 0.6 inflation or 0.6 higher prices just in a month across our country. So 0.3 is about half of that. That replaces this number. That brought the year over year number down to 5.7. Great, but what the market was expecting, right? Now, what is super important? Shelter, which are rents, home prices, and lodging. That is 39% of the overall inflation number. What's our biggest expense usually? Our shelter, right? Once again, that includes hotels, lodging, Airbnb, rentals, home prices. This is 39% of this, right? So almost 40% of inflation is made by shelter. Well, shelter real time right now is at 0.3%, right? Excuse me, that was in 2022, right? So what will happen is the January number comes out in February. The March number comes out in April. The April number comes out in May, right? So January coming out in February, we had a low number in 2022, right? So if we have a low number now, it doesn't move the needle at all. But the high numbers for CPI was February, March, and April. So February 2022 was 0.5%. February 2023, which comes out in March, will replace this number. So that comes out March 14th, right? April 12th, March's number comes out, and May 10th is where April's number comes out, right? So these will be replaced with lower numbers. So we believe the magical day is May 10th. I would not be surprised if rates come down 3/8, 0.5%, maybe even more. So I'm a big believer in the price is permanent, the interest rate is temporary. So go find the home, negotiate on it, get your credits, get the inspection items done, because we still have very limited inventory. Most areas are about 2 months supply. That's super low. It's usually 4 to 6 months as a normal market. So we are still more towards a seller's market than we are a buyer's market. For this short window, the buyers I see are more in control. And I don't believe that will be the case really past March or April. Remember, we have added demand just from the spring months because real estate buying is very seasonal. So I'm here to tell you, get the house now, negotiate on the price. If you do it with us, we'll refinance you for free after you make 6 payments. I believe rates will be bottoming out somewhere between October 2023, January, February 2024. we'll do the refinance free of any of our costs. We don't need to make money off you twice. So that is what we're doing for many of our clients. We see some great deals happening right now. We would like to make that happen for your clients. If you're a buyer watching this, we would like to make that happen for you. Give us a call, 312-731-4939, 312-731-4939.